everyone, welcome to Buy Now Sell Now Weekend. I'm Mubina Kapasi and we have a jam-packed show for you this morning. Some of the stocks that we'll be discussing on the show will be ACC, Federal Bank as well as Tamil Nadu Newsprint. And in our portfolio segment, we'll be discussing the portfolio of our viewer Ramesh Chakravarti's portfolio. And as always, we'll get you a perspective on what happened in the markets in the week gone by. So let's get on board all of our market experts. On the fundamentals, we are joined by Gaurang Shah, the VP at BNP Paribas Financials. And on the technicals, Ruchit Jain is joining us. He's the technical analyst of equities at Angel Broking. Good morning to both of you, gentlemen, and thanks for joining in on BNSN Weekend. Now let's get on board our very first query. We have Binu Ganeshan, who has sent us 3 queries via email all the way from Abu Dhabi. Now he says he has a time horizon which varies from 3 months to 1 year. And his first query is regarding ACC Cement. He says he's bought 340 shares of ACC at a price point of 1,520 rupees per share, and he wants to know what must he do with his investment. So let's really try and answer his query then. To tell you a bit about ACC Cement, like you can just see on the charts, quite a choppy week for that one, in line with the kind of move we have seen in the markets. But ACC Cement also delivered its Q3 numbers, which have been a major disappointment on all fronts. Volumes have come in at 5.6 million tons, lowest in 4 quarters. There have also been weak market conditions, which has led to lower realizations. In terms of its plants, the Jamul plant, which is an integrated plant, has been commissioned in the quarter, but the Sindri plant may be commissioned before October of 2016, or actually, that is something that we still need some clarity on. So let's get in a fundamental perspective on ACC Cement first. And Gaurang, over to you. What do you think in terms of the prospects for the company going forward?
Well, thanks, Mubina. So, the numbers for the cement sector overall for this quarter was a little bit of disappointment, and I'll tell you why. And ACC was no exception. We've had a fantastic monsoon after 2 years, almost 100% rainfall of long-term averages, or even a little bit above that in some of the geographies. And because of these, good rainfall, the construction activity itself at the ground level was extremely slow. But now this is a thing of the past, and you have a clear-cut 9 months ahead of you, 3 quarters if you will, wherein it's straight flat out, and you're going to see significant amount of pickup in terms of construction activity. That will aid to the offtake of cement quarter on quarter. And our sense is, with a company like ACC, which has got a very strong dealer distribution network and a pan-India manufacturing facility, it could be one of the leading beneficiaries given the kind of market share. So this will trigger consumption uptake from government side. And equally robust is going to be your private consumption theme and the robust semi-urban and rural market. From a long-term point of view, we have a target of 1685 on ACC. You can hold on to it.
Okay, on the fundamentals, you can hold on to ACC Cement. But on the technicals, let's just get in a check on what Ruchit has to say in terms of the chart patterns. Remember, like I just flagged off, last week has been quite choppy, with the stock ending 1.76% lower. In fact, if you just pull up the 1-month chart, there you have it, 9% lower for ACC, currently trading at 1490. Ruchit, our investors losing a bit of money over there. So what would you advise him in terms of a 3-month perspective and, of course, even a 1-year perspective?
Good morning, Mubina. Well, probably we have already seen some good correction in the stock from 1700 levels to 1500, sub 1500 now. Well, if you observe the weekly and the monthly charts, the previous up move which had taken place from 1150 to 1700 was clearly an impulsive up move. And right now it's going through a corrective move, which is a correction within an uptrend. So usually when such corrective moves take place after an impulsive up move, they retrace around 50 to 61.8%, which now comes around 1450 and 1385. Since he does not have a very short-term view of 1 or 2 weeks, and his view ranges from 3 months to 6 months, I would probably advise him to hold the stock, since the downside seems to be very limited from current levels. In case the stock goes and retraces up to 61.8% around 1385 or so levels, then I think you can even look to add further positions over there. Once this retracement correction is over, the stock should resume the uptrend. From a 3 months perspective, there's a higher probability that the stock would again retest levels around 1585 to 1600 levels. But if it's trading from 1 year perspective and is an investor, then I think once this corrective move gets over, it would start a new impulsive up move which could even cross the 1700 levels. So definitely from 3 to 6 months perspective as well as from 1 year perspective, the view on the stock is positive. Only in very short term there may be some corrective action further in next 1 or 2 weeks, but he should wait patiently and hold the stock for gains.
All right, some corrective action may be seen in this stock for the short term, but hold on for a long-term perspective. So clearly a technical and fundamental call really mirroring each other. Now his next query is on Federal Bank. He says he's bought 4,500 shares of Federal Bank purchased at a price point of 80.25 rupees per share, and he wants to know what must he do with this investment. Just getting a check on Federal Bank. Once again, that one too has delivered its Q2 numbers. The net profit has been actually quite strong, which was in turn supported by stronger NII and higher other income. Provisions, most importantly, have been quite stable on a sequential basis, with the NPAs going up just about 4%. And overall as well, the bank saw limited NPA stress. In fact, even the advances growth in Federal Bank has been above industry. It came up 27.2% higher on a year-on-year basis. Gaurang, coming to you then on Federal Bank, clearly, you know, in this quarter gone by, it did very well. So how do you expect Federal Bank to do?
So, Mumina, I think it's a steady performer in terms of earnings, and like you were just highlighting a couple of numbers. And our belief is that if the run rate continues the way it is, or in fact it improves, then it's going to transform into a lot of earning visibility, point number one. Point number two, the new RBI governor has already initiated a rate cut, and we've seen a 25 bips come through. Our sense at Geojit BNP Paribas that possibly if inflation stays benign and possibly heads down south, then the RBI governor will have much more elbow room for a further rate cut, possibly in Jan, Feb, March 2017, which will definitely augur well for the entire banking, NBFC and equity market. We are also equally excited about the loan book offtake, both on the corporate as well as consumer stroke retail side. From all this perspective, yes, you got in at 80 rupees, but you got a long-term time horizon, and by long-term, my definition is at least year and a half. We could be seeing this stock heading towards 98 if the bank delivers on the earnings.
Okay, clearly positive on the earnings. In fact, watch out for targets of 98 rupees in the long term. That's, of course, a 1.5 year view coming in from Gaurang. But Ruchit, on the technical side of the markets, really, you know, given the kind of weakness we have seen in the market, we've really seen Federal Bank as well succumb to the selling pressure. 6.5% lower in the last 1 week, though, of course, we did see it react positively, you know, when its Q2 earnings were released. But in the last 1 month, there really hasn't been much of a substantial up move. So what do you make of the charts for Federal Bank?
The last 1 week's correction is clearly in line with the corrective move which we have seen in the markets. But the longer term charts for the stock is still positive. In the recent last 4-5 months, the stock has even outperformed the other stocks within this banking space itself. And even if you observe the volumes along with the price action in last 4 to 5 months, then they are quite higher if we compare it to the volumes which were happening earlier. So this is quite a positive sign for the stock. I don't think that there would be much downside in the stock. 69 to 70 is a medium to long term support in the stock, and in case if it comes the 69 to 70, then I think that that would be another buying opportunity over there. So I would recommend him to hold the stock. Probably next 6 months or so, the stock should again cross the recent high of 85 levels, so he can continue to hold Federal Bank from 6 months perspective.
Okay, an optimistic view coming in on Federal Bank from the technical perspective as well. Let's just slip into a short break, but after we come back, we'll be discussing Ramesh Chakravarti's portfolio on the show. Don't go anywhere. Welcome back. Time to discuss our portfolio segment, and today we'll be discussing Ramesh Chakravarti's portfolio. Let's tell you a little bit about our investor. He is aged 35 years and he is a finance professional with a fairly long-term time horizon of 5 to 10 years. Let's discuss exactly what is in his portfolio. First up, he has care ratings in his portfolio. 80 shares bought at a price point of 1,270 rupees, a very good buy over there. DCB Bank, 500 shares bought in at 113 rupees. L&T Finance 1800 shares rather at 64 rupees, doing pretty well over there as well. And again, in the finance sector, he has PTC Financial as well, which he's purchased about 1200 of them at 30 rupees. 230 shares of NBCC and another 500 odd shares of MT Educare as well find a place in his portfolio. Apart from that, in the MNC space, he has Gillette, about 15 shares purchased at 4,335 rupees. SH Kelkar bought at 220 rupees. Stride Shasun, 50 shares over there, bought at 922 rupees. And in the oil and gas space, Mahanagar Gas finds a place in his portfolio, 100 shares over there. Snowman Logistics as well has been purchased by him, a price point of 60 rupees. And lastly, in the travel and tourism space, it's Cox and Kings purchased at 165 rupees. Some good gains being made by him over there. So let's just tell you exactly about what kind of chops and changes our market experts are recommending on his portfolio. And let's discuss the first three stocks. Care Ratings at 1,270 rupees. He's making some very good money over there. DCB Bank, however, as well is something that is positive for him. And L&T Finance Holding, 64 rupees, current price at 101 rupees. Gaurang, on these three stocks, all of them being in the finance sector, what would you advise him to do?
Well, quite a niche and market name, Care Rating that is, and in the business of rating corporate debt paper, new issue market paper. And as we expect the markets to move higher, you are going to see a flood of fresh paper coming and hitting the market. That's where their services are going to come into effect. Positive coverage, long-term target of 1650. On DCB, small bank but a major turnaround post the capex spend on branch expansion. We've seen traction coming back in the earnings visibility, and we are positive on that. Hold on with the target of 138 on DCB. On L&T Finance and Holding, now if I look at the acquisition price of 64,800 shares, current market price somewhere close to about 100, it tells me that he's making a good return. And at the same time, if I look at the earnings of L&T Finance and Holding, that tells me that there is good earnings visibility. However, I would advise him to book at least part profit, stay invested with the rest of it, maybe 50%, 40%, 30%, whatever you want to book profits, you can take money off the table, stay invested in the rest of them, and look out for a target of 120 on L&T Finance or Holding from a long-term point of view.
Okay, a whole call on Care Ratings and DCB Bank, L&T Finance, where you're making a lot of money. You can actually look at booking out part of your profits, but stay invested as there is more upside potential in this one as well. But the next three stocks in his portfolio, first one being PTC Financial, another one in the financial services basket, purchased at 30 rupees, which is a bit of a pain point for him. NBCC at 230 rupees as well is not doing so well. And lastly, MT Educare at 110 rupees. Gaurang, what's your view on these three stocks?
So on PTC Financials, we are quite optimistic and expect some turnaround to happen as the economies recover. So hold on to it with a target of 45. NBCC, extremely excited about the new redevelopment order that this particular company has got from Delhi. And equally exciting is the time ahead as far as the modernization of railway stations are concerned, and the government's theme of smart cities, housing for all, affordable housing, being a government company and an expertise in executing projects within the sector. We believe that there's going to be great earnings visibility. Hold on to it with a target of 340 on NBCC. Now, MT Educare, this is the one where I feel that is a softer spot with some amount of concern in terms of return on his investment. If you want to take money off the table, I would request him to make a shift to Ashok Leyland. And if you remember, Bobina, not too long ago, post the Hinduja Foundry merger, there were a lot of concerns and the stock corrected sub 80 levels. And post that has outsmarted the move up to 90 levels very recently. We are extremely positive about this stock, and as the merger goes through and times goes by, the synergies will evolve over a period of time. We have a target of 115 on Ashok Leyland. So if you want to make a switch, Ashok Leyland would be a better switch.
Okay, a hold on PTC Financial. Exciting times ahead for NBCC on the back of government orders. And Ashok Leyland has been a long-time recommendation from Gaurang on our channel. So you may want to consider switching to Ashok Leyland on the terms of exciting prospects ahead for that company. But the next three stocks in his portfolio, Gillette being the next one, purchased at 4,335 rupees. It's a company, it's a stock really that does not have much volume, not very talked about. SH Kelkar, a relatively new listing, purchased at 220 rupees. Currently, the stock, of course, is doing very well for him. And lastly, Strides Shah Soon, another very exciting purchase by him. 922 rupees is where he's purchased it at. And the current market price, of course, being 1,062 rupees. So once again, that's a very good stock for him. Gaurang, come in on these three stocks.
So, Mobina, firstly on Gillette, well, some of the MNC companies which are listed on the Indian stock exchanges, and if you happen to hold them, I think it is only prudent to hold on to those stocks and just pass it on to your next generation, because these are value and wealth creators from a long-term perspective. A niche and a marquee name, I would definitely advise him to hold on to it. If he wants a target, I can put a number of 4,550. But don't pay any attention to this target. You can just put your investment and forget about it and just pass on to your next generation as far as Gillette is concerned. SH Kelkar, now this is a relatively new listing, did quite phenomenally well post the listing. But however, having said that, my sense is that he does not, I would advise him to add on to the pharma, though he's got Sachin Pharma. Cipla would be a stock which I would recommend a switch from SH Kelkar. No specific view on SH Kelkar, hence I am requesting a switch to Cipla with a target of 740. Strides Sachin, the stock was in news for good reasons last week, and we saw a fantastic recovery. We believe that the negativity is thing of the past, and whatever negative news flow was there is already there in the price, and his acquisition price is 922, which is quite an achievement, because we've not seen the stock slip below 900 decisively and stay there for a longer time. Positive on the stock, look out for a target of 1280 on Strides Sachin.
Okay, consider Gillette as really a hand-me-down stock. Pass it on to posterity, hold on to it and forget about it. SH Kelkar, you may consider switching out to a pharma company like Cipla. Watch out for targets of 740 rupees over there. And Strides Shah Soon, positive on that one. In fact, a very good purchase price as well for Strides, purchased at about 922 levels. And currently the stock doing very well for it. So hold on to that as well. And let's just get in the last three stocks in his portfolio. Mahanagar Gas from the oil and gas space is one such stock that makes it in his portfolio. Snowman Logistics at 60 rupees and Cox & Kings at 165. Gaurang, what's your view on all three?
So again, relatively new listing, Mahanagar Gas, and has a monopoly in the state of Maharashtra. I was excited about this particular company, and we had come out with an IPO note to subscribe to the IPO and post that even if somebody wants to buy it from a long-term point of view from the open market, we are recommending that. The commentary from the management was that whatever funds they had garnered from the IPO is going to be utilized to capacity expansion and, of course, reaching out to geographies, which is going to translate very, very well. Gas distribution, pipe gas distribution company, see excellent futures as far as the current Maharashtra state is concerned. Hold on to it with a target of 875 on Mahanagar Gas. Snowman Logistics, now this is one more company which I am a little bit concerned. And pre-GST, we've already seen large part of the rally in most of the logistics sector stock. Implementation will transform into earnings visibility. However, I will say that make a switch from Snowman Logistics to Syntex Industries. We have a positive coverage with a target of 135 long term. On Cox & Kings, well, a seasonality stock, if I may, but good visibility in terms of earnings. We have a coverage with a target of 245 on Cox & Kings.
Okay, that's a call coming in on those three stocks. Mahanagar Gas as a whole, positive on the outlook over there. Syntex is a stock that you may consider buying. Target is 135 rupees. And Cox & Kings as well is a hold coming in from Gaurang. Now, do remember that this portfolio recommended here is a model portfolio, and we encourage you to consult your individual investment advisor before taking any investment decisions. Let's just slip into a short break, and on the other side, of course, our experts will be with us to give us a perspective on the market. welcome back. This is Buy Now Sell Now Weekend and time to bring in our experts to talk about what exactly are their stock picks of the next few days. Ruchit, Jain, firstly, take us through what exactly looks good to you in the market given the fact that we've taken quite a beating really. What exactly would you handpick?
Well, overall, coming on the markets first, we believe that last 3-4 trading sessions where we have seen some good corrective move in the market, it's just a follow-up of the correction which we have been witnessing since last couple of months. On charts, there are no signs of reversals. Even on Elliott perspective fund, this is a double corrective action which is going on, and right now Nifty is trading in wave C of that correction. So I think further downside would be seen in coming week, probably around 8300 we should test in next week itself. And if you observe the longer term charts, then this is this correct 38.2% retracement of this entire up move which we had seen from the budget days low would come around 8150. So I think from short to medium term perspective, even 8150 to 8200 levels could be seen in Nifty. So won't recommend aggressive longs at current levels. Yes, stock specific up moves would be there in certain stocks, but from trading perspective, my first pick would be to go short in BHL at current levels. Recently, we have seen after last quarter results were declared, the stock had corrected from 160, 162 to 130 levels. Now, after the pullback which was seen from 130, the stock had just managed to retrace 38.2% of this entire fall, and again have seemed to have resumed the corrective move. So I think downside could be seen, and recent lows of around 129, 128 could be tested. So around the Friday's closing, one can go short in BHEL, keeping a stop loss above 140, expecting a target of 128 in the coming week. And my second pick would be to go long on MCX. Well, if you observe the weekly charts of MCX, then the stock has formed a flag pattern which is a bullish continuation pattern, and right now the risk reward ratio of going long from current levels is quite favorable. This stock in the recent correction has outperformed the mid cap space, and I think this outperformance could continue in short to medium term. So one can go long in MCX at current levels around the Friday's closing. Keep a stop loss below 1240, which is the lower end of the recent consolidation, and expecting a target of 1475 in about 2 weeks per time frame.
Okay, two calls coming from Ruchit. It's a sell on BHEL and a buy call coming in on MCX. Gaurang, over to you then. Just give us some wealth creation ideas for somebody who has more of a long-term perspective, and given the fact that the markets have actually fallen quite a bit, what exactly, according to you, has been become, reasonable enough to really buy?
So, Mubina, I think these are great times to be in the market, and if you don't invest now, I think you're going to be losing out on a great opportunity from a long-term point of view. And yes, there are concerns on the global front which are weighing heavy on the market, but our sense is that that's going to be a thing of the past, and we'll get back to our work terminal and talk about investment ideas. So you have to be reached there before time and grab that opportunity and seize that opportunity when you see that correction from a long-term point of view to get invested in the equity market. And with that perspective, we've got three long-term investment idea. All three are from different sectors. First one is the private sector bank. And despite the correction, today this stock was holding out. Axis Bank is the stock that I'm talking about. Weak set of numbers gone by. A large part of the negativity is already there. Expect recovery to come through in the next couple of quarters, which will definitely throw in positivity in terms of valuation going up. From a long-term point of view on Axis Bank, we're looking at a target of 580. The next one is a mid-cap FMCG named Dabur. Great set of numbers about a week, 10 days back. Stock is trading close to about 290 or 295 odd levels. Again, the management was optimistic in terms of their launches in the Ayurveda and herbal category. And this has been a company which has been in the Indian market for a very, very long time. It's got a proven track record. We're looking at a target of 345 on Dabur. Third one is from the auto space, Escorts, the stock I'm talking about. Great set of numbers as far as the agri equipment tractor business is concerned. Expect the traction to continue. Looking at a target of 445 on Escorts again from a long-term point of view, and all these are 1 year plus kind of time horizon.
All right, 3 buy calls coming in from Gaurang. With that, we're completely out of time on this edition of Buy Now, Sell Now Weekend. Thanks so much, Ruchit, as well as Gaurang, for joining us. And thanks so much for watching, really. Have a lovely weekend.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at ET Now Live. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ET Now.